Hi and welcome to the Tricky Bells Show. We have set right here at the Norfolk. Of course, Absa Bank have released their 2023 full year results, and I'm here to unpack the numbers with Abdi Mohamed, the CEO and MD, and of course get to know more about their strategy right after his profile. Welcome. Abdi Mohamed assumed the role of CEO and Managing Director of Absa Bank Kenya PLC in May 2023, bringing over 28 years of extensive experience in the financial sector. A Kenyan national, Abdi's journey within the Absa Group has been marked by strategic leadership and diverse executive roles across geographical landscapes. Prior to his current role, Abdi served as the Managing Director of Absa Bank Tanzania and acted as the Managing Executive for Retail and Business Banking, overseeing operations across various African regions where Absa operates. His comprehensive expertise was also demonstrated as the Chief Operating Officer for the bank in Kenya. Abdi's career within the organization spans pivotal roles, including Director of Retail and Business Banking in Kenya and Zambia, as well as Operations Efficiency Manager at Barclays Global Retail and Commercial Bank in London. Beyond his executive responsibilities, Abdi is an influential figure in the banking community. He actively contributes in the banking industry's progress as a member of the Kenyan Bankers Association Governing Council, and is also a board member at UN Global Compact Network Kenya, where he champions the principles of responsible corporate citizenship and sustainability. Academically, Abdi holds a Bachelor of Commerce Honours from Kenyatta University, a Master's in Business Administration from Edith Cowan University, with an Advanced Management program at IMD Business School in Switzerland. Welcome to the show, sir.
Thank you, Maina. It's good to be here once again.
Same to here. And first of all, I must congratulate you. That was well done, quite some impressive results. But I want to start this conversation on your strategy. As you said today, when I listened to you, you spoke that you're just at the beginning of your 5-year strategy. I just wanted to understand from your end, can you provide more insights 1 year down the line, how the progress is going?
Thank you, Maina. Yes, we are at the end of year 1, just starting year 2 of the 5-year strategy cycle.
Yeah.
We do this in 5-year cycles. There was a previous one that we completed as well. Mm-hmm. And really, when I look at the key pillars and the elements that we are focusing on in the consumer bank, in business banking, in the corporate bank, and some of the key enablers that we've put in place around digitization, building the new brand. We see some of those key elements coming together, and the outcome, as you saw, at least in the year 1 numbers, is an impressive set of results that shows double-digit growth across all the 3 businesses that we have. So we're really pleased with where we've ended up, and we believe the strategy is delivering the result that we set out to achieve.
Excellent, and we wish you well in that as well. I also noticed that you're also beginning to be a little bit what I would call bearish when it comes to expansion. I think I saw you the other time at ECE, and I think I had you mention about agency banking. How is this going, and is this part and parcel of your strategy to keep expanding your branches?
Indeed, it's part and parcel of the strategy. As we look at the different customer segments, the SMEs, the retail customers in different parts of the country, and the needs of the corporate banking customers as well. There is a real need to look at the strategy around channels and the distribution overall, not just the branch network, but looking at all the touch points within which we can engage with our customers and ensuring that our presence and our visibility as a brand continues to improve. So the branch network is a big part of that equation. And as you said, we've started opening new branches, and that will continue in different parts of the country. Additionally, we are looking at agency banking as an option. As you know, we already have an agency banking network that is just about getting to the 1,000 mark. We believe in the course of 2024, that we will more than double that number in terms of agency outlets. And the idea is to ensure that wherever our customers are, in all the counties in Kenya, that we're able to provide the service, and we're able to create that visibility for the Absa brand in all those locations as well. So it's a big area of focus.
You know, Abdi, anytime I think about this, I think the customer is sometimes unpredictable, because you remember during COVID, there was a lot of digital banking, a lot of that, and we saw, customers really just adopting the digital ways of doing things. And you would have hoped this would have been the trend. But now we're seeing more and more often customers preferring to still go back to the banks. What does that inform you? What does that inform you about the customer?
I think it depends on the customer needs and the services that you're looking at.
Okay.
So there are transactions that are generally of a routine operational nature, such as payments, etc.
Yeah.
That most customers nowadays prefer to do online and self-serve digitally.
Yeah.
We've seen the number of transactions performed at a branch level reduced to 2% in 2023.
Yeah.
98% of our transactions are happening digitally.
Yes.
But that 2% is very important. It is the key transactions in a customer's life.
Yeah.
It's about investments and investment conversations. It's about mortgages and similar transactions that are material to the customer. For our corporate and business banking clients, it's the business strategy and business planning, the advice and working together. So there are certain things that will always remain physical, face-to-face conversation between a banker and his or her customer.
No, you're right.
That will always be the case.
You're right. Let's get to a bit of the numbers now that you released, and must first of all as well appreciate a remarkable 19% growth in revenues, surpassing the 50 billion mark for the first time. That was quite impressive. And I wanted you to point out one or two key drivers of these results.
I think the first element is that the balance sheet of the organization continues to grow. And we continue to provide working capital and other facilities into different sectors. And as I said during the announcement, the total disbursement on the loan side during the year 2023 was 147 billion, cutting across the consumer bank, business banking, and corporate. Within that 147 number, there is a 20 billion number for SMEs. And we focused very much in that space, especially women-led SME businesses.
That's impressive.
We've committed to do 100 billion in that space over the next 3 years. And at the current run rate, we look like we'll achieve that number. So the ability to support in different sectors and provide that, the facilities and the working capital capabilities, trained and related facilities, and be part of the economic growth of the country. I think this is the number one driver of our revenue. Because the more we participate in the economy, the more we help customers achieve their ambitions, the more we are seeing the revenues as well. Additionally, the transaction volumes and the clients that are digitally active has increased. We experienced 25% increase in digitally active customers. And that is more transactions and obviously more volumes and more revenue. And we believe that driver will be there into the future as well. And then lastly, it's the new business. We are not just looking at the traditional revenue streams of the organization. We are also building new revenue streams around asset management, custody business in the corporate bank, which we have just launched, the insurance business, and related activities. And all of them put together are getting to about 20% of total revenue, and are showing growth that is faster than the rest of the bank. So those are some of the key drivers of the revenue growth.
That's good and quite impressive as well. Let's talk about the customer as well, because I noticed they have been touched a bit when I looked at your NPLs. You have managed to maintain them at a single digit, which is quite impressive compared to the industry average. But I wanted to understand, what are the factors that you see this slight rise in the NPLs that you're noticing, and what are you planning to do in the offense so that at least you do not cross to some other digits?
Of course. As we say, it's an increase year on year, but still below 10%.
You're right.
And still significantly below the industry average. And that is partly because of our lending policies and the controls that we have in place, and partly because we work with our customers through these cycles. But as you say, it's increased. And some of the causes are related to the macro environment.
Yes.
Some of them are related to specific businesses and the challenges that they face within those business environments. And our approach generally is to ensure that we support the customer as much as we can. And as I showed there, we restructure something in the region of 2.1 billion. Went through a restructuring program that helps customers, of course, within the regulatory framework, work through this period of the cycle and ensure that we help avoid, recoveries, legal cases, etc., and work with our customers positively as much as we can. So the NPL is a good story so far. It's definitely far better than the average that exists in the market.
Very true.
And we plan to keep it that way.
Okay. Speaking of your support to customers, maybe as we delve into that point more, appreciating the restructuring that you're doing as well, I noticed there was some 374 million as well on some of the digital waivers that you gave. And from a standpoint of how it affected the books or what informed this, just wanted you to give some color into that. What are you seeing in this particular digital lendings and for you to even waive that amount? And from a standpoint of how it affected the books or what informed this, just wanted you to give some color into that. What are you seeing in this particular digital lendings and for you to even waive that amount?
This relates to micro and small businesses and individual Kenyans who borrowed. And as part of our responsibility as an organization to ensure that we support customers in distressed situations, we took that decision. Of course, the overall product, the Timiza product, remains profitable. There are thousands of customers who are taking the facility and repaying them on time. This was a very particular cohort of customers that got impacted, especially post the COVID period. And those are some of the interventions we've put in place to ensure that we support them.
Okay. Let's talk about some of the macro effects. I noticed you had quite a range of some of the effects, and you're not alone in this. I mean, this is an economy thing. And I wanted to know how you're navigating, especially the rising interest rates that we have seen. This has hit the industry in a way. Some people are beginning to shy off even from, financial assets that could have acquired. Others, I don't know what they're doing, but I wanted to understand from your point as well. How has this affected you and what are you planning around it? Of course, not to give the tips to the others, but in your way.
Look, I mean, this, as you say, is a dynamic and complex environment.
You're right.
The MPC, in taking the policy rate decisions that it took, was considering a raft of macroeconomic factors, the biggest one of which is inflation and how to manage inflation. And that's part of the monetary tightening that we have seen that has impacted on interest rates. But as I said, the inflation rates have been coming down and now within the target range as a result of some of the policy actions that have been taken, but also as a result of the good performance we have seen in agriculture. And as the inflation number starts to top out, as the inflation number comes and within the target range, we will be looking forward to see potentially what further actions and decisions will be taken around the policy rate. And in the meantime, we continue to work with our customers. We continue to navigate what is a dynamic environment to ensure that, we empower our customers through this process. And we are winning together. So it's a continuous conversation. We maintain that strategic flexibility to continue working within the environment as it is.
You're right. And I noticed you also gave your diversification, which is still growing, and I think it's pertinent to your strategy. One of the key elements that you used to as well do very well was the FX. And I noticed this time around it has sort of like gotten on a flat. I don't know what you're observing on that. I know we have seen this shilling strengthen it away. Is that part of it? But looking back at 2023, what are the factors and what are you seeing in this?
I think 2023 in the FX markets was a challenging year.
Okay.
But at the same time, it's a year in which we saw the best examples of working together as an industry and how you can use that ability to collaborate, right from the central bank to the KBA, to the individual banking institutions, to work through and ensure that we bring it into the right space. I shared some of the examples of the many meetings and engagements that we had between the central bank and the industry to ensure that we are creating more liquidity, more activity within the interbank market. There have been investments made by the central bank to provide technologies such as the one called BMatch that allows banks to have proper pricing discovery, to create transparency within the foreign exchange markets, and therefore to improve the liquidity. We had the launch of the DAO CSD by the central bank that allows investors to come online into the sovereign instruments such as the treasury bills, treasury bonds. And because that involves some foreign investors as well, that had a positive dynamic on the foreign exchange market. And then the traditional sources such as the diaspora payments, exports such as tea, all doing very well, have had this impact over the last 2 or 3 months of the currency really finding its true value and coming back into a much more stronger position, which from what we are observing through the months of February and March appears to be sustainable. So we'll continue monitoring, we'll continue working very closely with the players within the industry because it's very important that we have stability in the financial markets.
I also noticed there's a bit of a touch on the global reach. I've seen you opening branches even in China and all that. New propositions really. I wanted to know, with this particular expansion, especially in the China corridor business, what are the opportunities and even challenges that you've seen in that particular region?
Yeah, thank you. Thank you very much. One of the key pillars of our corporate banking strategy is to be regional, to be global. And to ensure that we are bringing that capability to our corporate customers. And yes, we've had previously the US office where we do a lot of connectivity through that corridor. We have our London office that helps with the European side of the equation. And most recently, we opened our China office. As you know, that's an important trading corridor for Africa and for Kenya especially. Right from the P2P type of activities that involve infrastructure and some of the bigger projects that we have there, but also a lot of trading by ordinary Kenyan businesses through the China corridor. And the reason we have that office and that location there is to ensure that we are able to provide that connectivity and to allow customers to trade through that corridor and present the bank as one of the solution providers into that space as well.
And finally, your brand consideration. I was surprised to hear that you have doubled on your brand consideration, which is quite significant. I wanted you to just shed some color on that, because sometimes we may just be going to the numbers, but from your presentation, you seemed to be quite happy and of course emphasizing that brand consideration is also part of it. I wanted you to help us understand how this impacted and how you even got this to the double digits of it.
No, thank you. I mean, the brand is such an asset for Absa in this country. There is a lot of respect, a lot of trust for the brand. And this is through research and what customers and stakeholders tell us out there. We've spent a lot of time, a lot of resources through sponsorship, through visibility, but most importantly, through keeping our promise as an organization. There is nothing you can do for the brand that is better than serving your customers well and keeping your promises to them as well. As a result of which, the awareness levels are in the 90s, and brand consideration, which is a very, very important indicator, which shows your relevance to the markets, your relevance to your customers and stakeholders, has doubled in the course of the year 2023 into the 40% range.
Yes.
And it's something we are really proud of and will continue working on it. So the brand is an incredible asset.
Yeah.
And 4 years into our journey in Kenya as the Absa brand, we feel good about where we've reached and what we have done with the brand.
Sure enough. I can't end without asking you to tell the shareholders what you have given them in terms of dividends. So it would be nice for you to mention that, and then we can close.
Thank you. Thank you so much. We announced a dividend number of 1.55 per share, 8.4 billion shillings in total,
Wow.
which is a 15% growth year on year.
Yeah.
And in terms of yield, dividend yield in the market, one of the best so far announced this year. I got a lot of good feedback from investors and shareholders who attended our event this morning.
Yes.
And the idea always and our dividend policy is to ensure that we continue balancing between investing for the future,
Yeah.
as well as ensuring we are giving the shareholders return in the current year. And I think we've achieved that balance for 2023.
Wow. Thank you so much for your time, sir.
Thank you, brother.
Absolutely.
Sana.
Always a pleasure.
Thanks a lot.
There you have it. Abdi Mohamed, quite optimistic and saying, listen, we are still optimistic on the year ahead and on our strategy. Thank you so much for your time. I leave you now with the markets.